Welcome to Cambridge House Live. Thanks for joining us. I'm Bridgitte Anderson, and joining me now is Thom Calandra, and he is an investor and a writer and partner with Torrey Capital, also well known for involvement with Marketwatch and also Stockhouse. I want to start with a bit of a macro level, Thom. One of the things that you have said recently is that you ignore geopolitics when it comes to investing, which really goes against what a lot of people might think. So tell me why.
Hey, Bridgitte, thanks. Great to be here. Great to see what a show, man. It's amazing. 500 people. 8,000 people, 500 companies. Well, what I tell people, and I said it this morning as well, is if you ignore geopolitical risk, it's going to make it a little easier to invest in jurisdictions that have a high risk-reward ratio. Now, I don't mean ignore in the sense that you have to reject all knowledge of drug cartels or a changing political scene or changing mining laws. These are happening all over the place. But if you're early and you have a tolerance for high risk, Colombia is a great example. I started going back to Colombia where I used to live. I started going back in 2007. It was cheap in 2007. Now it's 2012. The perception is still that it's a dangerous place to go. Mm-hmm. It's not, but it's way more expensive than it was in 2007. So when you tend to at least put or triangulate political and geopolitical risk, triangulate the old Clinton term, like limit the damages, you can make decisions that could give you huge returns, but you still have high risk.
So not necessarily ignore, but put it on the shelf.
I think so.
Because when you look at what's going on in Europe and with the Eurozone, that is a direct geopolitical impact of what's happening in markets all around the world.
Yeah, currency market and the bond market are the two largest markets in the world. I like to use Sierra Leone as a great example now. I've been going back to Sierra Leone, and it's great for diamonds, iron ore, and gold. But now, of course, what's the perception of Sierra Leone? Blood diamonds, mm-hmm. Right? I'm telling you, and I'm telling your audience, that there couldn't be a nicer place in the world. Like Colombia. Okay, it might be a little rough around the edges, but it's like being in Paris when you compare some of these places. I'll use one example, Bridgitte. When I go to these places, and I go every month, I'm in a different country, people say, well, be careful down there. And I have to say, well, you be careful in Oakland, California, okay?
So what criteria do you use then when you're evaluating some investments?
A lot of criteria. I have to know
aside from the geopolitical risk then.
I have to know the people. I have to see the project because I've been burned so many times, and gotten whiplash so many times. I have to have somebody explain to me, because I'm not a geologist, but all of my work and my research is on site, meaning I have to see it with my own eyes. I have to understand from a geologist or a mining engineer who's not involved with the project what I'm looking at, whether it's a porphyry or a high epithermal gold deposit. I have to know that the company has a lot of money. My ultimate criterion is that it has to be dirt cheap, because that's the ultimate insurance, right?
Right. You have been spending a lot of time talking about and looking at and analyzing natural resources, so let's dig in on that for a little while. What do you think is going on right now? Because you were talking about a bit of a shift.
Yeah, last 10, 11 months, everybody in this room can tell you it's been tough. Very difficult since April 1st of 2011. Very difficult to raise money. People who raised money in the first half of 2011 that was great timing. You raise money when you can, not when you need the money, but when you can. Last 10 months, we've seen a terrific sell-off in metals equities. I think that changed in the past 2 weeks. I think now we're seeing a lot of respect for copper gold porphyries. On Friday, Calibre Mining, CXP, had a huge copper gold find in Nicaragua. We've seen other big copper gold stories affect the market cap of the stocks. Lumina, Regulus. I think we'll see some in Colombia next week or in the week after. And
so what's driving this in the last couple of weeks?
I think the tax loss selling is over. There's There's a return of speculative risk to the marketplace. And it's funny, but Bridgitte, this doesn't happen often. But we've seen a couple 24-hour periods in the past, more than a couple, in the last 2 weeks, where gold and the U.S. dollar have risen at the same time. So there's a little bit of a flight to safety, right? And that means that maybe we're going to see some more financial or I hope not, political challenges. I don't know if it's going to be Iran or Israel or Russia I was just in Moscow. The day I left, they had 150,000 people on Christmas Eve
And
protesting.
these are geopolitical risks, so obviously you can't ignore them.
No, I know, but I think you have to go in when you have the geopolitical risks. Most people don't want to touch Russia, but let's face it, Bima Gold, now Kinross, made a lot of money in Russia, and Russia has a long-standing tradition of graphite, gold, uranium, coal. Uranium right now, it's another great story. It is cheap. There have been massive moves in a few uranium companies in the past 3 or 4 weeks.
So you use this volatility, particularly in the junior mining sector, then, to benefit from that. I mean, that you look at the risk, and that's where you go in.
I think you have to, and you have to stay for long periods of time. You know, I know this is going to come up, so I'll.
I was going to ask you, so
yep.
you can bring it up if you want.
Well, I tend to hold things for a lot longer than I used to because, I got a little carried away at Marketwatch. Probably couldn't control myself, but it actually had a great ending. The only challenge with the action that was taken against me by the SEC was I can name 100 people in this room that have faced similar civil challenges in Canada and the U.S. Unfortunately, I was very well known, and I was the biggest newsletter writer in North America at the time. But it's made me more powerful and wiser, and I know now that real-time disclosure is incredibly important. That's why I keep my portfolio live at Stockhouse all the time.
So some good lessons learned.
I think so. Plus, it put me in touch with bigger investors who said, "Wow, Tom got burned, so he's learned."
Do you think this has impacted your reputation or credibility at all, though?
Yeah, I'd have to say that there are about 5 people in the whole world that lost money with me, and really, what happens is we are who we are. And there's no way I can change what happened. But I do have to say that nothing that I wrote or commentated about as a broadcaster, a writer, a newsletter writer, or a journalist ever turned out to be wrong. It's just that there were several examples of my trading stock too quickly. And as we brought in the age of the internet with this gigantic property called Marketwatch, we had no compliance. And I think fairly, I learned what the rules were, and I learned them well.
And so how do you then translate that learning when you're talking to investors at Torrey Hills?
Oh my gosh, most of the companies that we represent at Torrey Hills Capital, they like the fact that we know the rules. They like the fact that I have a huge network of high net worth investors, CEOs, CFOs, miners, geologists. And they like the fact that I took some heat, right? Now that was 9 years ago, right? And it also helps to be a long-term investor, I can tell you, Bridgitte.
And looking at the environment right now as a long-term investor, if you had to choose some favorite jurisdictions, I mean, you've mentioned a number. You've talked about Colombia, you've talked about Sierra Leone, but if you were to look at what's going on right now, what interests you the most and why?
Well, once again, I could mention places like Quebec, which always gets the highest rating, and and I'll say, okay, sure, Quebec is great. I own a lot of Golden Valley mines. It's a great prospector generator. Glenn Mullen there has done a great job. But for me, the real excitement is in places like Ghana, right, where I own several companies, including Extra Gold. In Colombia, where my largest holding, my family and I's largest holding in a company that I assisted in rescuing, in a sense, is Belhaven Gold, copper gold porphyries. Also Colombia, Sol Vista Gold. I love Colombia. I love Ghana. I love Mali, African Gold Group. Mali is a French. There's a small Muslim population. And Bridgitte, I go to these places multiple times a year. The one that worries me a little right now is Mexico. I have large positions in Endeavor Silver and Great Panther Silver, but I have noticed lately that companies, and let's face it, Mexico is probably 20% of the people in this room. The Canadian exploration sector, a good 20-25% of the sector is in Mexico. A lot of people are getting more and more concerned about the drug cartels, the growing season for the marijuana, and some of the violence. And gosh forbid, I say, that anything should happen in Mexico. You'd see 20% of the exploration sector in Mexico evaporate. That would be great, though, for the other 80%.
Tom, it's been a real pleasure. Thanks very much for joining us. I appreciate it.
Thank you, Bridgitte. It's always a pleasure to be here with Joe Martin's Cambridge House.
Thanks.
Bye.